Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we have Nathaniel Getzels with us. This is going to be a super interesting episode because Nathaniel has quite a breadth of experience here. He is with Getzels Group and is also a celebrity real estate agent, but that's not what he's here to talk about. He's here to talk about his investments. So Nathaniel, thank you very much for hopping on the show.
Oh, it's my pleasure. Thanks for having me on today.
Absolutely. I told you before we got on here, we always like to start with stories. We like to hear how people got into real estate in the first place. You have a breadth of experience, so I'm sure you got a good one. How'd you get into real estate, way back when?
Yeah. So years ago, I was finishing my master's degree and I taught in every level of school from preschool administrator through college professor. Right. So it's a lot. It was a big range because I thought that was the space I wanted to be in. And the reason that I liked that space is I felt like I could help people a lot, right? And I could do a lot of good. Later, I realized that I feel like school, I disagree with everything school teaches in the basically. So, work hard. No, you should work smart. Get out of debt. You should leverage your debt. Get a good job. No, you should build wealth. Yep. And don't copy, which I think we should always look at who's doing the right thing and figure out how to copy that and make it better. Yep. So the basis of everything that I was teaching basically in school in general was wrong at that point. And I was getting offered all these great jobs. And I just could not imagine doing any of them and wanting to stay alive. So when I went back and I went, okay, what are the things that I enjoy? Right. So my dirty little secret at night when I was in college is I would go and I'd open up my computer and I'd start surfing Zillow for hours. And
one of those guys.
Pictures of houses. Right. And it was amazing. And then I was studying the trends of the market and how cities grow, why cities grow, where they grow, when people move, why they move. And so I was like, okay, that's fascinating. That was like my dirty little secret. Right. That was my guilty pleasure. And then I went, well, wait a minute. I can take that. I can take the that knowledge and that love and passion, and then combine it with helping people because you're basically helping most people either make the biggest purchase of their life or a large financial decision that can drive generational wealth for, obviously generations because it's called generational wealth. That's the whole point. You can literally help people set up their families for the future. And even if it's not that, it's a large financial choice that you need very good guidance to make the right choices on. Yep. So I went, okay. And then I'd been investing already at that point because when I started college, I realized that renting was expensive. But if I bought something, I could rent out part of it and mitigate almost all my costs.
I wish I had that wisdom when I was in college, for sure.
Right. It was beautiful because I still worked. I got straight A's, and then I didn't have a lot of costs, so I could have a lot of fun.
Yep.
It was good planning and unintentional. It set me up for my future career unintentionally. Gotcha. So what I did is I wanted to combine where I can help people and still geek out about real estate. And so I literally dropped what I was doing as I was finishing my thesis, started in real estate and never looked back.
Nice, man. I love it. So you were on the path you were a teacher. You were on the path towards that career. You're going to be a principal, whatever it is, the end goal.
I was going to be a tenured professor in a college. Okay. That was the goal. And I could have had it, or an administrator at a school could have had that, or owned a school. Right. Those were the three paths. And I went, no, none of this sounds good. But, even through real estate investing, there's a lot of education that happens organically through there. So I got to connect with people, right? Because you need to attune, even in an investing environment, you need to attune with your clients. So that way you have that trust, that flow, the vibe, whatever it is you want to call it. And once you have that trust built up with your clients, then, or your investors, then they'll trust you, and you can really grow and build some very cool, unique projects.
Yep.
That makes sense?
Absolutely. So you took that passion of teaching, you took it into real estate as a realtor, it sounds like. And from there, I mean, you've gone so many different places. We had a brief conversation before we got onto the podcast, and I got a little bit of background about Nathaniel, and we'll go into it. But the big thing that, it sounds like you're known for is you're a celebrity realtor. So I do want to touch on that just briefly, and then we'll get into the investing. The only question I'm going to ask is, what was your favorite celebrity deal that you did, and who was it with?
Such a hard question, because there are so many NDAs that are usually involved.
Yep. Totally
so
understandable.
I can't really tell you who it was with, but he did the property. My favorite property that I sold was actually bought as an investment, and with an investor loan, and was far from their largest purchase, because it was many millions, but they had many more millions, obviously. But so the strategy there was, where is it, and where's it going to be in 10 years? Where's it going to be in 5 years, right? Where's it going to be in 20 years? And how much money can I pull out of it? Because at that point, it's not about the purchase price, because it doesn't matter, but it's about the investment, how it acts as an investment vehicle at that point, right? So you have to figure out how he can take it and make more money. I mean, do you put it in an insurance wrap, right? Do you put in an insurance wrap with some other properties? Oops, sorry about that.
Technical issues, real quick. There we go. Oop. We lost Nathaniel briefly. He's on his phone, and that can always be a struggle, especially when it looks like he is back. All right. Oop. And I think we just lost him completely. And that is unfortunate. So I'm going to have to cut this out, and then we will be right back with Nathaniel. It sounds like he dropped here. So give me 1 second to get him back. All right, we're back. We had a little bit of a technical issue, but Nathaniel, he was able to fix the issues. It's always fun having, doing this from phones, because phones they're so small, they bounce around. So Nathaniel, you're back. Let's get right back into it. We were talking about your investments, and I lost my train of thought. Oh, there we go. So
the celebrity, my favorite celebrity deal was, they were talking about how they were going to leverage the investment. Yep. And is it going to be an insurance wrap? How much money can they pull out of it? How will it act as a great investment vehicle for the future investing? So that was the reason. That was the purpose of that. Now, even when people are buying their own primary homes, it either becomes a lot about that. But if it's a primary home for celebrities, especially, it's less about that, and it's more about the vibe, the feel, the style, how they can show off about it. And very often it becomes an investment vehicle, but in a different way. They'll bring people there. They'll do deals at the properties. So the property will become a framing for other investment deals, and kind of an establishment of, look at this beautiful asset that I have. You want to do business with me, or I can use this asset to make more money, but not directly from the asset. Does that make sense?
Yep. That makes a lot of sense. I actually, we had somebody on here who did auctions, for high-end auctions. And he said that a lot of celebrities, they buy, or just, I guess, ultra rich people will buy really nice homes, Beverly Hills, wherever. And then they'll just rent them out for like, not as a rental, but for like movie sets and things like that. Oh, yeah. And I thought that was a kind of an interesting use of luxury real estate.
Oh, absolutely. In fact, there's a city here in Los Angeles, or an area called Bell Canyon. And I had the most expensive house in the city listed, or in that area listed. and it's now used for movie rentals. It's all just studios renting it. Yeah. And, studio rentals, they pay a lot. So a lot of these high-end homes, they're different types of rentals. So California, for example, is a 50% state, meaning more than 50% of the homes here are rented.
Wow, really?
Yeah. Huh. And you have a combination of your institutional investors, right? Because the majority, at least up until last month, I don't know the stats for this month, but I know last month and for the few months before that, 1 in 6 homes in the US was being purchased by an institutional investor.
Yeah.
So, and they're putting them into portfolios. So those houses are literally gone basically forever because they're put into portfolios. And then even when those portfolios trade, they're going to sell to another institutional investor and stay in that portfolio. Yep. So those houses are out. Then you have the short-term rentals, which most people are still doing wrong, but there are a lot of people making a lot of money from them. So that takes up a big section. And then here in LA and other areas that have very unique homes and are near studios, you have a lot of homes that are used for studio rentals, movie shoots, music videos. I mean, there's some homes, you have the Augusta rule, right? Where you have 14 days where you don't have to pay the taxes on those kinds of rentals. And that's largely thanks to Augusta, Georgia, where I own property there too, actually. And the entire city transforms for the 14 days of the Masters.
Oh, interesting. Yep.
Yeah. In fact, there, the city, I think their population triples, but almost everybody that lives there leaves during that time.
Wow. That's crazy. I never made that connection between that law and then the Masters. Makes a lot of sense though, because so many people come there for the Masters. So it makes total sense.
And that's why it's called the Augusta rule.
Yeah. You mentioned short term there. I know you're into short term quite heavily, and you're on boards of companies. You mentioned before we got on the podcast, and just now you said that people are doing it wrong. So, what is the thing that you see most investors? What's the biggest mistake most investors are making when they purchase short term rentals? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
So the biggest mistake they make is they buy in the wrong place for the wrong price. That's the biggest mistake. Just like most real estate, The biggest mistake people make are they buy wrong. So you're not understanding the rules, regulations, and the advantages of where you're buying. That's number one. Number two is if you buy wrong, now you have to price wrong, which is going to cost you money basically until you end up selling because you've lost so much money over time. And also, once you buy, you're not just magically rich. There's a whole management and strategy to it. So you want to prepare the house correctly, which most people do not. You want to maximize the amount of the size. And you have to understand, a lot of the income or a lot of the cost prices is based on how many people you can sleep in the house, right? It's not about, oh, well, I have this big, beautiful room. I'd love to come vacation here. Nobody cares where you want to vacation. That doesn't matter. You have to figure out how you can get the most people in that house because that's who pays the most.
Yep. And
you need to adjust the price. You have to have a dynamic pricing tool. So you want to adjust that price every single day. You want to look at also the future of that area. So for example, Arizona, they changed the state changed the entire rules for the entire state, which is if you're not in an HOA, you can basically Airbnb anywhere.
Okay.
Which short term, yay, everyone wants Airbnb. We can, the state's letting us get rich, except remember the thing that breeds value.
Scarcity.
Liquidity and scarcity. Yeah. So all of a sudden you're going to have these markets that are flooded with short-term rentals. And I think your long-term, you're going to drop in your value because it's going to be a flooded market. Yep. That's one of the things I love about what LA has done, because, they allowed it, then they completely disallowed it. Now you have to get a permit and be allowed. So LA, I think, is doing it really well right now, especially in Malibu and areas that literally don't have enough hotels to serve the demand. So it's great. It's unfortunate what happened in Breckenridge, where they capped the number of permits and they took away 4,000 people's permits overnight.
Oof. That'd be rough, especially if you bought it as a short-term rental and you underwrote it as a short-term rental, and now all of a sudden, shit, I can only do long-term. I'm not going to be able to find a renter.
It's a problem. Now, something that's interesting to understand is on Airbnb, and I use that as the example because Airbnb makes up the majority of the market for short-term rentals, even though there's other really great platforms that we definitely take advantage of and you can make a lot of money through. But more than 20% of those rentals right now are over 30 days.
Okay. Interesting. I actually didn't know that.
That's a massive number. Yeah. So that's why, like you mentioned, I was on the board. I was recently put on the board of a company called Houselet, and they specialize in 30 to 90 day furnished rentals.
Okay.
You can rent for less or far more, but there's a gap in the market there, and there's a big demand.
That's like corporate housing, traveling nurse housing, that kind of thing, right?
Not just that, but people go on vacations. I have a lot of people who come from out of state, who come to LA or Malibu or the surrounding areas, and they'll rent for the summer.
Yep.
It's a summer rental. It's a winter rental. You have a lot of Palm Springs, which I know it's kind of counterintuitive, but right now it's the summer and it's their slow months because it's so hot. But there's a lot of people who come there in the winter because it's still warm, and they're going to come from Canada or colder environments and spend the winter there in Palm Springs. Maybe they live on the beach and it's too cold, or they're in Canada, or they're in Seattle, maybe. I don't know. I hear it's cold there. I don't know, but
I would say it's very temperate up here in Seattle. We're never high, we're never low. We're just right down the middle.
Well, if you want warm in the winter, Palm Springs is it. So understanding your market is also important. A lot of people tell me, I'm just going to buy something in like a Malibu, for example, which really has 3 great months, and the rest of the months are okay, but there's not a huge demand to be there necessarily.
Yep.
So buying in the right place, buying for the right price. Obviously, the price is always the secret to any buy in real estate in general.
Yep.
And having a plan. Actually, probably the biggest thing people do is they don't have a plan. They just buy it and they think they're magically rich overnight. They have no operation plan. They have no exit plan, right? And they don't have a backup plan. So as you saw during the pandemic, let's use Las Vegas now as an example. A lot of condo hotels, and I love condo hotels. I think that is a huge space that most people don't even know about, much less know how to maximize. But condo hotels are the only type of real estate that went down during the pandemic in Las Vegas, for example, because people stopped traveling, right? So when these short-term rentals, especially condo hotels, they're linked more to the travel industry than the real estate industry as far as income goes.
Right.
So all of a sudden people stop traveling. Now, how do you always win in real estate in general? You always buy low, but the key is to keep going, because even if you have a loss, as long as you can keep going, you can deduct that loss from a win later. The only way in real estate you really lose is to stop. If you stop, you are done. Your loss is real. It is realized. There's no way to regain. There's no way to recover. So if you can keep going, by having a good reserve and a plan. If, let's say, you don't have someone in your rental for 3 months, well, most people at that point had to do a fire sale, or were so upside down, now they're going to have foreclosures, or, they're going to be in distress.
Yep.
But if you have at least a 6 month to 1 year reserve, well, if in 3, 4, 5 months you realize, hey, this isn't getting better, well, then you sell, but you're not underwater yet.
Yep.
Right. And most things are not going to last 6 months. Even the pandemic, the lack of people traveling, people were, Vegas wasn't closed for a whole year. Yep. It was closed for some months and then reopened. So you have to weather these storms.
I'm going to hover on that just a moment, because I feel like that's one of the biggest lessons that I myself learned when I was doing my initial investments, is the importance of having CapEx reserves, having money in the bank. And so when you guys, if any of you guys out there are just getting started, you're just buying your first few investments, make sure to have those CapEx reserves, have money in the bank just in case something goes wrong. Because like you said, real estate investing, the only way to lose is to stop. And if you have a few months that you're experiencing high or vacancy, that can be okay so long as you have the money in the bank. So I like that you said that, because I do feel that's a very important lesson that I learned. And I think if you haven't learned it yet, just make sure it's there, because it's not a fun lesson to have to learn in reality. I'm going to move us on, because short-term rentals is one thing you do, and I know you got a lot of other stuff. So let's talk a bit about international investing. I know before we got on the show, we talked a little bit about that. You buy internationally, you buy land, you buy property. That's something that I've been interested in. It's also something that I don't know a lot about. So first, how do you decide on the market that you buy in? And then what are just the top issues that you the hurdles that you need to overcome when you're considering buying international?
Absolutely. Okay. So all great questions, by the way. You're a very good host. So how you choose is, first you decide what type of market you're going to go into. So for example, I love developing markets. Why do I love developing markets? Because a lot of these developing markets haven't had a recession for over 20 years.
Okay. And define developing for everybody.
I'll use a Georgia, right? The country of Georgia.
Country.
Right. Country. Yes. I also own in the state of Georgia, so it can get confusing. But in the country of Georgia, it's a smaller market. There's lots of growth. It's not an established, it's not a US, European, UK, one of these bigger countries that's established, that is not really in the developing phase anymore. They're developed and, first world powers.
Yeah.
Right. Yeah. So a lot of these smaller markets, they have so much room to grow. And once they get some stability, right? So they're not at war. They have a relatively low amount of corruption in their government. They're in a part of the world that they should be geographically okay from, natural disasters and other factors like that. Now, granted, I know you guys are all thinking, "Oh, Georgia. Well, isn't there that close to a big, war
pretty
right
close
now?"
right now, but yeah,
pretty close. It's pretty close, but for several strategic reasons, it was a good choice, and it still, I think, has a relative level of safety from the fray of what's going on, and that was calculated. That was careful, because they were at war about 13, 14 years ago, and it was not a good time then. Yep. So that's the first thing that you look at, the type of the type of investment you're going to make. Like, there's some great stuff in Italy right now. There's some great opportunities in established countries as well. But, this one specifically, I love the developing countries.
Yep.
But so then after you choose what kind of investment, and oh, by the way, for developing countries, a very, very, very important factor is if they're accepting international investment. And I don't just mean, you go and buy a house. I mean, on a multi, on a corporate level, right? On an institutional level. And that was one of the things that also attracted me to Georgia, is they opened up for international investment a few years before I invested there. So there was a lot of US money, a lot of US companies are going there. So that was another factor I used personally, because so in real estate, I'm sure you've heard, oh, well, look where the Starbucks, look where the Whole Foods, look where all these things are going, right? And I do my own research. So I'll choose a market, I'll study the market, I'll see what I think the economy is doing, and then I'll see what other people think, meaning the big institutions. And, they're spending hundreds of millions of dollars doing similar research on a much higher level than I am. So if their research and my research line up, I feel like I'm probably doing something right.
I use my personal criteria. I only do here in the US, but my personal criteria is Walmart. If there's a Walmart within 10, 20 miles of where I'm looking, then I'm probably okay, because Walmart they have a lot of money, and they're definitely concerned about where they put their facilities.
That's interesting. I've never heard that one before.
Yeah.
Learn something new every day. I love
Okay,
it.
so Georgia's where you went. It sounds like you chose that because it's developing. It's relatively safe. It has a lot of room to grow. So once
and
you choose
a lot of U.S. investment as well. I mean, if you look at Dubai, for example, the reason that it basically was it is the fastest grown city ever, over from 20 years from dirt to one of the top metropolises in the world, is because of international investment. If you look at New York, the thing that changed it from a hub for the US and a hub for the world was international investment. Yep. So I chose Georgia specifically because all the numbers, there was a lot of growth. It was already one of the top destinations for travel. And I was looking for vacation rentals, right? I actually bought, I'm building a condo hotel there.
Oh, wow. Okay.
Yeah, it's just about being finished. So I'm really excited, because that means I get to start having people go there soon. Nice. But, the numbers looked good. The growth looked good. The cash flow and the cash on cash in my worst case scenario was great. And my best case scenario is mind-blowing numbers. And in my, I always look at all my investments as three phases, right? Or three scenarios. Worst case, best case, most realistic.
Yep.
And every single one of those was a strong green light. So I went, okay, this makes sense. You also, in an area like that, you have to figure out, what are the laws if you're out of the country, right? Are you protected as an American, or as wherever you have your passport from? Are you protected? Can you sue them? Can you take them to court here? Do you have to take them to court there? What are the laws? Who's going to, are you even allowed to own in that country?
And what about language? I don't even know the language spoken in Georgia. But what about, English is the international business language, but I'm sure you run into issues with the language. Is that something that?
Yeah. So in Georgia, the main languages are Georgian, Russian, and then a lot of people speak English most places in the world. Yeah. I've never really run into a language issue. If I am having to deal with someone who does not speak English, I can usually find a translator, or relatively easily. And if there is a cost, relatively low cost. So I've never let that stop me, because there's an international language, which is money. So as long as the money makes sense, I'm not worried what language is spoken in that country. And the only place I've actually ever been in the world, physically been, where it was an issue, strangely enough, was China, where I knew the people I was talking to understood English, but they refused to speak to me in English.
Interesting.
It was very, very weird. I mean, I've been to the North Pole, Norway.
How was it up in the North Pole? Are you thinking about buying property up there?
It's fascinating, because there is an international treaty zone. So it's an archipelago of called Svalbard.
Okay.
And
yeah.
It's really interesting, because it's an international treaty zone. So there is no government. It's under Norwegian stewardship, but there's basically just an overseer, which they call the governor of Svalbard, but there's no infrastructure. You can own there, but it's kind of complicated because it's an international zone.
Right.
There's no major hospitals. If you get sick, they send you off the island. You're not allowed to die there.
Do not die here. That is against the rules.
Right. It is illegal to die. I'm like, I don't know what the punishment is because you're dead. So.
Yeah.
If you get very sick, they send you off the island. If you're in late pregnancy, they send you off the island. So it's a very unique place. Mainly places like that are either you're going to buy a tourist place, like a short-term rental, or a longer-term rental for a student or a coal, like a miner. That's the only people that are up there.
And one other question that kind of came into my mind, we are closing in on our time here. So I do have to push us into the quick question round. But before we do that, I do want to ask, when you're doing international investing, it sounds like you do a lot of short-term rentals, long-term rentals. Have you ever considered the commercial side? And is that something that you would dissuade someone from doing internationally, or is that, just on par with residential?
So I haven't delved into that myself, but I know many of my friends have. The key is you really have to understand the laws, because while in a lot of countries, there's laws that protect you as a homeowner because they want your money there, they want you to invest. There are a lot more restrictions and loopholes for owning commercial properties and running commercial businesses. So I know a lot more horror stories of people who have literally had their properties seized, their commercial properties seized out of the country. And because they didn't fully understand the laws of the area they were in, they did not get them back. Oof. So it's really just about understanding your restrictions and your protections. But I wouldn't dissuade someone, but I would tell them to be very careful and definitely hire a local lawyer and hire a lawyer here to who's an expert in international dealings of that area.
Yep. That makes complete sense. Interestingly enough, I've always thought, I do self-storage. That's one of my biggest holdings. But the US is like the only country that really does self-storage. It's not really present in other countries. And I've always thought that was kind of interesting. I don't know if it's an opportunity, but maybe other people just don't want to store extra shit, which makes sense.
Americans let go of their stuff, I guess.
Yeah, no, we like stuff. That's for sure.
You know why I need stuff? I need stuff so that I can fill my space with more stuff and then get more space to get more stuff.
It's sound logic. Definitely sound logic.
Absolutely.
All right. So we are through the time. I do have to push us into the quick question round. Are you ready?
I am ready. I don't know what they are, but I'm ready. Absolutely.
You're a pro. There's not going to be a problem. Starts out with books. I'm a big bookie. If you aren't into books, you like any other form of education, podcasts, YouTube channels, whatever, give me two of them, one for general life wisdom, one for real estate specific.
Absolutely. So general life wisdom, there is a great book. It's written by Shaheen Cheyenne. It's called Billions. And it is amazing. Reading the book feels like you're watching one of the wildest movies you could ever imagine. But it actually is all true. I know him and he's a great guy as well. And the book is real. If I didn't know him, I would have thought it's all made up because it sounds that phantasmical. But basically he went from living in a car to a billionaire in a very, very, very short amount of time, and is still a great guy after all that. So amazing.
And what was the author there? I just searched Billions, and Carl Sagan's book is the one that pops up. And so what was the author of that?
Shaheen Cheyenne. It's called Billion, the king of the pill cult.
Okay.
So
okay.
Shaheen, Shaahin.
Shaheen Cheyenne. There we go. I just found it.
Found him? Yeah.
All right. Billions. I love it. I'm going to have to check that one out. Now give me, that was what was that? That would be your general life wisdom. So give me a real estate one.
And real estate one, there's a couple different ones, but I really like, what is it called? It's by Robert Revkin. He's the founder of Compass. He wrote about his experience and kind of how that related to real estate. I am trying to think of the name now. I bet if you Google it, it'll come right up and you could help me out with the name of it. I'm picturing the book.
Compass, we're going to figure this out on the show because you know what? We can't leave you guys hanging. Compass Real Estate. It's a wonder of Google here. It just always answers your questions, no matter what question it is.
No one succeeds alone. That's what it's called. No one succeeds alone.
No one succeeds alone. I love it. You beat me to it. I just pulled it up here. No one succeeds alone. Compass. All right.
I was picturing the front of the book, and I was thinking triangle, but it's just a pic because it's like a picture of people that are in the shape of a triangle on the front of the book. So
there you go.
Yeah.
All right. So No One Succeeds Alone by Compass, and then Billions by Shaheen Sayan. Great recommendations. Moving on to the next question. This is for your younger self. So if you could go back to Nathaniel, who was a teacher, still looking at that administrative career path, go to him, look him in the eye, give him one piece of advice moving forward.
Run.
Easy. Run. I love it.
My only regret is I didn't move faster, fail faster, and scale faster. So scale and fail faster. That's the two things I would tell them to do.
That mirrors a lot of people's advice, which is that they wish they got started earlier. So, hey, if you're out there, you're listening to this episode, I've said it so many times before, but just get dirty, get out there, buy your first investment property. You will not regret it. Right. That moves us to our next question. And this is habits. Habits form the foundation of our life. So if you could point to one thing you do every single day that contributes the most to your overall health, well-being, happiness, and success, what would that be?
Not fear failure. The difference between a high achiever and a low achiever is the high achiever hates failure, but the low achiever fears failure. And when you fear something, you run from it. So I don't fear it. I hate it and I fight it, but I know it's going to happen and that's okay.
Perfect. Great advice. And that leads us to, this one is a good one. Good question for you specifically because you are so geographically dispersed. So I say the US, but I'm going to open it up to the world. It's a big place. There's a lot of square miles out there to put your hard-earned dollars. So what is one market you are most excited about today?
Well, I selfishly am still most excited about Georgia. So that is a very, very hot market that I think has a huge amount of potential growth that is unrealized for the most part at this point. So that would be my number one where I'm invested. The number one that I'm not invested in yet, but will be soon, is actually Bali. Okay. Because as I know people talk about Bali all the time, and probably tired of hearing about it because it's been like this cool place to go, and it's so inexpensive. But there is a lot of people, especially from a certain few countries right now, that are investing large sums of money into Bali. And I think it's going to become a different place in the next 10 years because certain countries where there may be military things happening have people trying to get their money out, and they're moving to places that are not at war. And, remember, Bali is the only non-Muslim island of Indonesia. And that's why it grew so much. It grew so much because mainly Australians would go there and visit it. And that is why it became a big location that it did, and different from all the other islands in Indonesia. Interesting. Because remember, Indonesia is a kingdom, but it's of several islands that all had different cultures. So I think that is one of the secret places that is going to change in front of our eyes without us realizing it.
Interesting. Bali. Huh. Okay. So Bali and Georgia, those are, I love that you said that because it's not in the US. So great markets to look into if you guys are searching for international investments. I'm going to move us along here because we are past our time. So let's get into the next question. And this one is tools. Tools are the backbone, habits are the backbone of your life. Tools are the backbone of any business. So point to one tool. Usually we say software tools here that you could not function without in your business.
Well, it kind of depends which business you're talking about, but I really do like AirDNA. That's a big one. Contactually, which is now owned by Compass, actually is a great tool I use. And yeah, those would be the two top tools, I'd say.
Perfect. AirDNA, that one's for short-term rentals. And then contextually, that is a CRM system, right?
It is, yes.
Perfect. Okay, that leads us to the very last question. You've given us a lot of good advice. So I first want to say thank you for hopping on and sharing. And this last question is for the listeners. You've given us a lot of good advice. So I'm sure people want to reach out and say hi. What is the best way for them to do that? And what is something that you'd be willing to give for the show for today? Absolutely.
So the best two ways are my Instagram, which is Getzels Group, at Getzels Group on Instagram, GETZELS GROUP. On there it has my blood type, it has my phone number, it has email, it has everything. Feel free to DM me there, or also you can text me at 818-535-5337. That is my direct text line. And so really, if you Google me anywhere, all of those things come to me, but the best are Instagram, phone, or Facebook Messenger.
Perfect. And I will put all those in the show notes. So if y'all want to reach out to Nathaniel, learn about international investing, about short-term rentals, about 30 to 90-day rentals, all the stuff that he knows a lot about, I will go ahead and put those URLs in the show notes. So just click a little more in the description. It'll pull down the full description, and in there you can find Nathaniel's contact.
And I post every week, I post multiple videos of valuable information that has to do something with the real estate space. So feel free to pop in and watch those too.
Perfect. All right. Well, Nathaniel, that wraps it up. Again, thank you very much for hopping on the show.
Absolutely. Thanks for having me. You're great. And you do have a terrific name as well. So it's a pleasure to be here.
To your brother there. I love it. And for everybody who's here today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.